Good afternoon from Austin, Texas. This is AKW Analytics, and welcome to the BullBear Analytics Daily Debrief. Today is Thursday, October 29th, 2015, and this afternoon we'll be discussing Starbucks, the S&P 500, crude oil, gold, and of course, Bitcoin. Speaking of Bitcoin, get your access to our BBA premium content right now at BullBearAnalytics.com. With our Expert Pro membership packages, you get daily market updates, price analyses, and trade ideas, as well as full weekly reports and unlimited access to our 24-hour chat room. Again, visit BullBearAnalytics.com for more information. Okay, so let's get to the chart. First of all, we'll be starting with Starbucks, as they released earnings after the bell today, and boy, doesn't this chart look familiar. It looks almost identical to the Twitter chart that we posted after they released earnings on Tuesday. Again, weaker than expected guidance is pushing the stock lower. However, if Twitter continues to be an analog, then we can expect a bounce into resistance from current levels, as this is an OTE long zone right here. That said, we'd still be cautious in the medium to long term, given how reliant these guys are on China for revenue growth. But for a trade, we could get a bounce, and we're seeing one now. It's happening faster than Twitter because this is just a stronger stock. But yeah, we think it'll chop around in here for a little bit. Next up is the S&P 500. Following the post-Fed rally yesterday afternoon, the S&P seems to be holding the gains surprisingly well and appears to be magnetized by the 2100 level up around here. Despite the fact that we're still hunting for shorts as far as trades and for the safe asset and wealth portfolio, there's not been a sell signal yet, so the risk-on train keeps on rolling. This will be a battle zone, but until we get up there, we think the shorts will continue to get pounded. Next up, crude. Well, this bounce has been pretty vicious, and it came sooner than expected. But what has materialized shouldn't come as a surprise, given our discussion on Tuesday. I mean, look at where this thing is stopping, right at technical trendline resistance. This ain't a coincidence. Let's see what happens tomorrow before doing anything here. But either long on a breakout or short on a failure. They could both be pretty juicy trades going forward. But let's see the price action tomorrow on a Friday, and Sunday night going into Monday as well. Another commodity, gold. Gold has gotten hit again recently, and especially after the Fed meeting yesterday. Fed uncertainty and dollar strength is still sending gold lower, and the chart continues to look pretty ugly. We wouldn't be acting in this market yet either, much like oil. Although, if anything, there's probably more risk to the downside in the near term here than there is in oil, just given the chart, lower lows, lower highs. And interestingly enough, in diametric opposition to that, another sound money proxy, Bitcoin, is doing incredibly well. We can see here on the hourly chart that the trend remains intact fully, despite a corrective candle and a pullback down into the 305 area just earlier this afternoon. However, China continues to lead, and China is strong, very strong. So we think there's probably more room to the upside if near-term resistance levels can be broken, but you got to go to BullBearAnalytics.com for a specific time frame analysis and the details of the trade ideas for the entries, exits, and stop losses, i.e. risk management. Generally speaking, we're staying bullish, and that appears to be the right call for now until market structure breaks down. So that's it for today, folks. Thanks so much for tuning in. We'll be back on Monday at the close with another edition of the BullBearAnalytics.com Daily Debrief. Have a great weekend. Cheers.